What's up, everybody? Michael and Coco here to do some technical analysis on the financial markets. Today we're going to be looking at the US dollar. We're going to be looking at the S&P 500, the Nasdaq 100, and the Dow Jones. We're going to be looking at multiple time frames, and then we'll take a quick peek at gold and silver as well. I'm going to try to move through this fairly quickly. All the charts are going to be linked in the description below, so if you want to reference them, by all means, you can do so. Let's get into today's episode. All right, welcome back. The first chart that I want to take a look at here is the US dollar. This is a chart that has been on everybody's radar, especially when we broke out of this channel, consolidated, and then we really saw this rip higher here recently. Now we're kind of running into this 23.6% fib level, and we're kind of running into struggles. Here's my opinion. If we hold above 94 for multiple times and build a base around there, I don't see why we couldn't see a leg higher up into this next fib level. That would make sense. However, if that is the case, I think that's going to apply a lot of pressure on the equities market. And the equities market, we'll get in here too just a second, started to see somewhat of, to me it looks like a short squeeze, and we'll walk through that as to why I believe that. But for looking at the dollar right now, pretty bearish type day. We could not even get even just a little bit above this fib level, and then we closed lower than the previous trading day. So overall, it looks like it's kind of getting toppy, and we might start seeing it roll over. But like I said, if we can hold above 94, if that holds strong, if we come there and start building some support, that could be just another potential bull flag to see a move higher in the near future. So watch out for that. This is the S&P 500 on the daily time frame. Nice big gap out of this falling wedge. And we were talking on my last thumbnail, I said this was a morning star, or whatever I called it, or whatever it's called, I should say. I didn't make up the name. But I had a little bit of concerns with it. And the reason why I had concerns is I went over in the last market brief, there's a lot of resistance. However, it hopped over some pretty massive areas once we zoom in on the closer time frames. 3330 particularly was one that it just kind of gapped right over, and then it kind of just ramped up and then just hung out there for a while. So we didn't quite overtake the 50 period moving average, missed it by a few dollars, but we did trade intraday above it. If we would have recaptured that, I would say that's a really good sign for the bulls. But as of right now, the 50 period is still going to have that level of resistance. We have a gap below it, which we'll get into soon. And then it kind of looks like, 3,400. If we get some continuation to the upside or a close above 50, 3,400 looks like that level that it wants to go and test, maybe just a little bit above it there. Ultimately, though, like I said, this big gap up today and this ramp up higher, couple that in with some really big short positions for the Qs and the Nasdaq E-mini futures. There's been a lot of short building, and to me that kind of says, hey, somebody might think, no, well, that means the market's going to roll over. Potentially, but maybe not yet. What we might be seeing right here is a short squeeze to the upside. Now, whether that squeezes and continues to move higher, well, I guess we'll find out, but this little move today still has me a little bit on edge. So we'll come back to this here shortly. But overall, they closed 1.61% higher on the day. So that's fairly nice. Let's go ahead and look at the Nasdaq 100. All right, so here is the Nasdaq 100. The Nasdaq 100 today did close above the 50 period and actually even pulled back down and back tested and moved up higher. And it's kind of sitting right where the 20 period moving average is right now. So it has a little bit more work to do. This type of candle, this breakout, that's known as a hanging man, and hanging man's on an upwards move could potentially mean a reversal, but you don't want to put too much weight on these type of things. What you want to see is if we start closing back below the low of this candle, then this could be a hanging man candle. So you need some sort of confirmation, but overall bullish move for the day. We overtake the 5 EMA. We gapped out of this channel. We took over the 50 period moving average. This is a good sign for the bulls that we can see some continuation to the upside. Now there's resistance up ahead, and we'll get to that on the 2-hour time frame for the Nasdaq. But as of right now, this looks pretty strong. The MACD down here looks like it wants to start curling back over and maybe changing the momentum. Like I said, if this is a short squeeze, we could very well have multiple trading days that take us higher. I don't necessarily know if we're going to just make an all-time record high going into a lot of market uncertainty. We have the presidential election debates. So if something crazy goes on there, something might happen within the stock market or react differently. We have the stimulus bill on the sidelines, still a lot of news, and that could potentially come out at any moment. So got to keep an eye out for all of these things. As I see it and how I'm kind of reading the market right now, it's I'm not really getting short at these particular point in times. I'm looking for long position setups and buying them on some pullbacks. Here is the Dow Jones on the daily time frame. Just another nice move today too. 1.51% up higher. That's 410 points. It's sitting right there at the 50 period. So the price is at 27584. The 50 is at 27546. So it did overtake the 50 period moving average. That is a good sign for the bulls. However, we have a little bit of an upper wick. That could be very well just a reversal type candle. Once we get a couple closes above there, if we close for the week above there, that would give me a sign that this market can very well head higher. But as I see it right now, we need some more data points to make some more confirmations. And once we get into the smaller time frames, you're going to kind of understand what I mean by that. So let's go ahead now and look at the 2-hour time frames for the S&P 500 and then the Nasdaq. All right, so here is the 2-hour time frame for the S&P 500. This is the SPX, and let me tell you why. Like, first, I just have a lot of uncertainty still. It remains. And why do I have this uncertainty? Let me walk you through it. So first, is this a legitimate breakout? Yes, it is a true breakout of a falling wedge pattern. It broke out, gapped up, moved higher. But look where the price is. We are now pinned between two air pockets, right? We have a gap above us and a gap below us, and the price action is between the 200 and then also the 50 period. And the futures market probably right now is actually probably pumping a little bit higher, I would expect at this particular point in time of me filming, which is 4:48 on Monday, September 28th, 4:48 Pacific Standard Time. So I very well might be pushing higher right now. Here is just kind of my idea. If we can't get above this 3,400 level or this 3,380 level tomorrow, then I would start to consider that this might, potentially start rolling over here in the near future and get held up at this resistance. If you look at this wick right here, or even this wick right here, and then you measure it up with this wick, you can see the trend line from this point down to here would probably come in confluence with this air pocket, this gap right up here too. So we might get a push higher, pass into 3,380 up to 3,400, this range, and then we might get rejected. In my head, this is telling me that we're not seeing the bottom of this correction yet. I feel like this is very temporary. Is that, 100%? No, that's just my speculation. This very well might be a short squeeze taking place. Like I said, there's huge short positions taking place in the Qs and then also the Nasdaq mini futures, E-mini futures, and that could very well squeeze us a lot higher, especially and see a lot of these tech stocks rally a lot higher. So it's, unfortunately right now we got to just look at specific levels and make trade plans around those levels. But as far as like a longer term trade right now, running into more market uncertainty, I'm still kind of just, on pause a little bit right now. I'm looking for basically individual stocks that pull back to support, that have good setups, and then I'll probably execute those type of trades. If the stock price continues to pull down here, to fill this window, these gap windows typically act as a level of support, so 3310 could be a very good area. But also keep in mind 3330 was a very important area, and we just gapped and cleared that and just ramped up higher and just is right there. So maybe even potentially a pullback to 3330 and you have a stop loss below that could make for a good bounce trade to potentially see if this does have legs and we can move higher. It's very possible that we just might gap open again tomorrow, maybe even clear this gap or destroy this gap and then maybe come back to fill it and act as support. So there's just so many scenarios that can take place right now. You need to be very careful trading these type of environments, especially at the early stages of this breakout. The volume on this breakout wasn't just astronomical by any means either, so that's kind of in the back of my head too as well. But a couple air pockets pinned between the 50, pinned between the 200. It's going to be interesting to see how this one plays out here in the very near future. On the 30-minute time frame for the S&P 500, you can see these gaps a little bit more well defined. We are above the 200 and above the 50, but take a look at the RSI indicator. It's overbought here, so we might very well see some sort of a pullback. We kind of creep back in within the RSI below 70, so technically we're not overbought, but we're not far from it. And then the MACD looks like it's about to start crossing over and potentially doing a little shift in momentum right here. So it's possible that we might get continuation rollback too, and then I'd be looking at 3330, 3340, and maybe creating a trade plan around that level on this 30-minute time frame. Do I think that we're just going to pull back and collapse tomorrow? No, not right on this exact breakout. I feel like this breakout will have some juice behind it, but I just don't think it's the end-all be-all. I feel like we can head lower on this correction. I mean, keep in mind, there's, you know, the $2 trillion stimulus package that everyone's saying that's probably just going to get, you know, pushed aside. That's not going to pass. But if they are able to come up with a stimulus package, that can very well send the market a lot higher as well. And then if it does start going higher, then all these short positions are going to have to cover, squeezing us into higher territory. Now, if the market does want to rally and just create an all-time record high again, we're going to have to pay close attention to the RSI, because that would probably most likely be a negative divergence in the RSI, which could be very bearish. So the RSI has been overbought on the daily time frame, and if a price action makes a new high, I don't feel like the RSI is going to quite reach that next high on the RSI. So it's very possible we can see a negative divergence there, but I'm looking right up here at 3380, 3390, this zone up here, maybe just a little bit higher, like I said, 3400. This looks like a pretty strong area, a lot of confluence for resistance taking place. So I would not be buying long right here personally. However, you know, maybe if we get some strength on a breakout, you might be able to trade into some of that action. But I'd be very hesitant and careful right around that area, at least, you know, going into tomorrow to see what, you know, what takes place here. The 2-hour on the Nasdaq does look, in my eyes, significantly stronger, and the reason why is we drew out this channel, we broke above it, we have a little bit of a gap, but the price action is above the 50, it's above the 200. This to me looks like a good sign that it wants to continue to the upside. Where can that go? I'm not 100% positive, but I do have this pink box laid out here because that would make sense for a breakout move of this channel. There's obviously some resistance up here in this level, and you know that, like I said, would make some sense to me. Now, there might be some pullbacks along the way, like right over here, this level, 11,550, 11,500. That would make sense to me to have some hang up right around in that area. And keep in mind, the RSI indicator does, you know, it's trending nicely. It's looking strong. So it's very possible we might get into overbought territory very soon here as well. And like I said, I'd be very careful that the price action starts moving up in this direction throughout the week. And then I'd be, like if I was somebody that was shorting the NASDAQ right now, this position right here to me would be an area that I'd be probably thinking about covering. So if you get breaks above this, I feel like there'll be a lot of people covering, which can even squeeze it higher. And also this channel falling wedge, or this channel that we drew out, when we got above here, it looks like we had a lot of coverage taking place, which is another reason why I believe that, you know, if shorts are covering right now and we get some continuation to the upside, like this is a big day for the Nasdaq, you know, up 1.91%, 213 points, pretty much finishing on the high. Like this is a strong day. This could be a lot of short coverings, and we might see some more movement to the upside. Now, scale out of your positions when you're long. You want to take these profits in while you can, because we don't know what's going to come out from the news or what can potentially happen from these elections. This is where you need to be very in tune, and you have to be very, very quick at being able to take profits off the table when you have to. So this is not something that you want to just kind of leave and walk away from at this particular point in time, because there's still, like I said, a whole lot of market uncertainty. And just my personal opinion, I don't think that this correction is done. I feel like we might get some, you know, a relief rally here, who knows how long, but I don't think that it's going to be the end-all be-all. I think we'll test these levels again here in the near future. Here's that interesting kind of indicator that I like to use here and there. It's called the Pring Bottom Fisher indicator, and every time that it crosses below this horizontal line, it's an indicator that, hey, there might be some sort of a, not correction necessarily, but a pullback taking place in the markets. And then what you look for after it crosses this line is for the blue line to cross back above the green. And as you can see right now, September 28th, the blue is heading pretty steeply down. And that, to me, even after a little bit of an uptick today, we didn't even see an uptick here. And that kind of has me a little concerned, why I don't think this is actually really the bottom taking place. But you never know, in the next couple of days, if we get some more upwards momentum, this might start curling over. So I'm going to watch out for this. But as you can see here on this big pullback here in March, and if you're watching this indicator right when it crossed, that would have marked the bottom. There's been multiple other times where the price action pulled down and then it crossed. You just need to know when to exit and scale out of a position. But this indicator really is good for just kind of seeing short-term bottoms in the market. So I'm going to be keeping an eye on this one. very closely. Here is gold on the daily time frame. Gold and silver both had a pretty strong day. We are building some sort of a base right here at about 1860. That's a good sign for the bulls, a nice uptick today. I mean, we saw a big day down for the dollar relatively, but we're still holding that 94 level. So I'm kind of doing, looking at this with caution. And if you look at the dollar, it went up and went sideways, right? We're going sideways right now. And in the gold, we went down and now we're going sideways. So we got to watch for a break in either direction. Like I said, I am looking for more down here, 1825 down to 1800, that kind of zone, to get some more gold picking up. I would love to see it even come a little bit lower. That would be healthy in this type of market environment. I would, this is just my opinion. If it does pull back, like I said, I'll be buying in. If it continues to consolidate down here, I might consider it as well, but I bought a couple of ounces from this point and then down here as well. So I got a couple extra ounces just on this little pullback here. I feel like these pullbacks are going to be a good buying opportunity for the physical metal, and even some miners and things like that. Just they're a lot more volatile. I personally like owning more of the physical metal myself. Here's silver. We broke out of that symmetrical triangle, pretty significant move to the downside, and now this lower trend line here is still holding up, so that's a good sign. We had a strong day today, up 2.21%. This is looking good for silver, but keep in mind this could be very well just a bear flag, and then we might get more of a break to the downside. How are we going to know if we're going to break? Well, we're going to keep an eye on the dollar. If we start to see the dollar press above and get above that Fibonacci level, that I think it was the 23 level, we very well might see the dollar start to continue higher, and that could send gold and silver lower, and that could even send equities lower as well. So it's a very interesting time right now in the markets, and we're going to have to keep close eyes on all of it. Here's the NYMO, the McClellan oscillator for the NYSE, and this is actually a pretty good sign, right? We saw a big spike up for the bulls coming into a positive breath for the market. As you can see, I mean, we're not far above it, so it has been a negative breath for the market for quite some time. We've been seeing this drawdown, and now we're kind of running into this level of resistance right here where this dashed line is. And I have it drawn out here, but I didn't on my other. So keep in mind, we are running into this level of resistance. If we break that, it could then become back a level of support. So couple different levels that we got to keep an eye on. I think that mostly overall, kind of just my head as we come to a close on this video, is we need to make sure that the big indices get above the 50-period moving average, and they can settle there for the week. Okay, if they can settle there for the week, this is more of a bullish type move in my opinion. If they cannot settle there for the week, it leaves me a little bit uncertain and on the sidelines like it does right now. So can we get above the 50, and can we recapture the 5 EMA would also be a really nice thing too on all the charts. So on the daily for both the S&P 500, the Nasdaq, and the Dow Jones, what I want you to take a look at is when we get and close above the 50, and if we can hold that position. If we can hold that position, that right there, a lot of traders keep their eyes on that specific moving average as well as the 200. And then, like I said, there's a lot of short positions, much more than usual, taking place in the E-mini futures. And that one could represent that we might be accumulating the move for a potential short squeeze, which can shoot this market a lot higher. So a lot of market uncertainty, a lot of things kind of going on behind the scenes. My number one focus right now, like I've been saying, is I'm going to be keeping an eye on the dollar and then individual stocks that set up for good, just good risk versus reward trades. If you are trading the indices or the futures market, make sure you're looking at these specific levels and building trade plans around major levels of support and resistance. So if you get stopped out at a main area, you took a good shot at it. However, if you're just kind of just jumping in with no plan, things could really turn south for you. So that's all I got for you on today's market brief. I'll see you back tomorrow.